everyone, and welcome to UBS Trending. I'm Anthony Pastore. In this rising rate, high inflation environment, there is concern about credit quality across all municipal sectors, including bonds that are backed by the full faith and credit of state governments. We're going to take a look today at the states that are in a position of strength and those that might be considered higher risk. Joining me now is Sudeep Mukherjee, fixed income strategist with the Chief Investment Office here at UBS. Sudeep, always a pleasure to have you sitting here with me. Good to see you.
Good morning.
So, Sudeep, when we think about the states and specifically muni risk, a lot of people look at that and they don't realize that it's so crucial to the health of the municipal market when you have states that are actually lower risk than obviously higher risk. So we're going to get into the details there, but you recently put out a report talking about the muni risk for U.S. states. Maybe you can give us a brief overview of that report.
Sure, and great to be here. Thanks for having me. So just before starting out on what the report has, I think it's important to note that states and state general obligation bonds are the cornerstone of the $4 trillion municipal market. So the health of states is key in determining overall municipal credit quality. So this report provides an updated metrics-based risk assessment of the 50 states and DC on a 1 through 5 CIO risk category scale, 1 being the lowest risk. So it's an easy way to determine what's low risk and what is high risk. And so we've taken 14 different metrics across economy, financial performance, indebtedness to come at risk score, to arrive at this risk scores. And that's what the report really talks about.
Right. And actually, we pull up the map of this, and the map, if we can go back to that map, that was right out of your report. And I think for viewers, it's a really great depiction of the states. And you can see that there's a lot of health out there, thankfully. When I read your report, I took a deep breath before I turned to the map. But there are still a few states that maybe aren't quite as resilient. But it's good to hear that there's general resiliency when it comes to state credit quality. So how would you then characterize, Sudeep, the impact on state credit quality, especially given those economic headwinds that we're talking about all the time? We're talking about an interest rate risk environment, inflation, a lot of volatility in the markets. What's the story there?
So in short, state credit quality is resilient. That's the overarching theme here.
Which is great to hear.
Yeah. So therefore, 48 of the 51 state obligors are in our risk categories 1 and 2, signifying very low and low risk. Coming to the impact, high inflation and interest rates obviously pose some economic headwinds, but the strong fiscal position of states should be very helpful in navigating those challenges. And in addition to that, there are certain mitigants to these economic risks that are also very useful in navigating challenges. For example, high inflation and interest rates will depress economic activity, but will also boost wages and prices in nominal terms, so states should be better off in trying to handle these challenges.
Right, and on that chart, maybe you can explain a little bit about the lines that we're seeing, because that really does show the resiliency of the states.
And this is key to their ability to withstand the challenges. As you can see from the chart, fund balances, which is the black line, and the annual tax revenue growth, which is the red line, both have trended up strongly since the pandemic. In most part driven by the extraordinary fiscal assistance by the federal government and very strong recovery post-pandemic. So that puts states in a position of strength to deal with the oncoming.
Right, so they can absorb a lot of that economic and financial stress that could potentially come their way. Okay, great. So obviously, when we looked at that U.S. map, we saw that there were a couple of states. None of them are at the highest risk, which you have as category 5. But there's some 4s and 3s, particularly New Jersey and Illinois. And actually, New Jersey looked like it improved a little bit from your CIO risk category from a 4 to a 3, which is good. But maybe you can go a little bit more deeply into why New Jersey and Illinois are still considered at risk.
Yeah, so New Jersey is now CIO risk category 3. It was risk category 4 earlier last year. So 3 is moderate risk. And we changed it from a 4 to a 3 on the back of strong state finances. As I said before, strong tax revenue growth. New Jersey has a lot of unfunded pension liabilities, so that will keep it at moderate risk. But overall, we believe, given the recent strength, it is well positioned at moderate risk of CIO risk category 3. Illinois, on the other hand, has seen some improvements, especially in their short-term finances. Their backlog of huge unpaid bills is now down significantly. That's a good sign. But their pension liabilities really weigh on their credit, so that will, in our view, remain as a high-risk credit and CR risk category 4. So some good news there, but those are 2 states to kind of watch out for.
Right, and again, like you had written in the report, there are no states right now that are at the highest risk level of 5. So that feels, and we've talked about Illinois in the past. It's been in a risky position for some time now, but it's good to see New Jersey going back up 1 notch. So as we wrap up here, Sudeep, obviously there are a lot of municipal investors out there, and as we talked about right at the beginning, the credit quality of states is really crucial to the health of the overall muni market. And you do talk about in the report that the road ahead, that we could see an economic slowdown, that maybe the possibilities of a recession are increasing. Given all that, though, where are the opportunities for investors within the municipal space, particularly when it comes to the view of state general obligation bonds?
So so the credit is resilient. State geo bonds, just like other municipal bonds, have shown weakness year to date as interest rates have risen. But in our view, the rate story or rates have progressed more than spreads, which are the bond spreads of state government bonds. So it could be very well that with economic weakness, those spreads actually increase, particularly states like Illinois and New Jersey. But we do believe that with inflation moderating, and the long treasury rates, volatility will not be as high, as you can see from the chart there, as we saw in the first half of the year. So the threats to valuation and risk to valuation are somewhat limited now. So that said, I think state geo bonds are positioned well. From a credit quality standpoint, states have a lot of tools at their disposal to handle economic stress. So overall, we feel good about it.
Good. So it's a good investment opportunity for those who have that particular risk profile in their portfolios, obviously.
That's right.
Terrific.
That's right.
Sudeep, always a pleasure. Great job on the report. Again, it can be a very complicated topic, but you really simplified it to ways that I think people who aren't as deep into the muni market can really grasp. So thanks for doing that, and it's always good to have you here on the show with us.
Thank you.
Great. Sudeep Mukherjee from the Chief Investment Office. And for more information and access to this report on states and their muni risk, make sure to take a look at our website, ubs.com/views. Lots of other UBS content on that particular website that you can access. Plus, you can make sure to follow us on social media. We've got content on all the major distribution channels: Facebook, Instagram, Twitter, and LinkedIn. Plus, all of our past UBS Trending episodes, just like this one, are available on demand. And as always, if you do have any questions about your own portfolio, which you might after hearing this conversation between myself and Sudeep today, make sure to speak with a financial advisor. Until next time, I'm Anthony Pastore. We hope you have a great day, everybody. And remember to keep your eyes on what's trending. We'll see you soon.